Do you have a personal framework around adding to your trades? Each week I change one thing to my strategy and plot the results. This week I added in specifically a 25% move towards the target. My win rate dropped, but the profitability went up on winning trades. I realized this strategy doesn't take price movement into account, and I plan to make a change around this for the next trading week. But your experience, are there more opportune moments to add into trades based on price movement? Since tracking my trades and changing just one thing at a time, in 3 weeks I've gone from negative 53% profit. That's fucking loss, bro. Negative 53% loss per week to around plus 10%, 2.5R every week. I get better and better. That's great, Rohan. It's almost like just keeping things simple and controlling risk just fucking works. Or something like that, or maybe whatever, maybe. All right, so you're essentially asking, is there more opportune moments to add into trades based on price movement? Yeah. So here's the way I approach it, bro. Let's go to some random pair here. What? GBP AUD? Okay, you know what? Fine, GBP AUD. So the idea would be on the daily chart, make sure you think it's going to go in one direction. It can be one of two things. It all starts from the higher time frames for me, Rohan. This is just how I do it. I'm not saying this is the best, most scientific, appropriate way. Just what works for me, dude. So on the daily, maybe you think it's in like an uptrend or some shit. So you're just like, all right, sweet, it's in an uptrend. Maybe I'll do that. That's one thing it could be. Second thing it could be when you start on the daily. Price could be bouncing off of a support level. And you just think price is going to go from like this support level up to the next resistance zone. So something like that, right? So let's go ahead and just literally take it back in time here. Fortunately, we already saw what happened. So, we're going to play some hindsight backtest demo warrior right here for the sake of showing you this trade shit. So say you're on the daily chart, right? You just think, all right, hey, price is at a daily support. I think it's going to go from here to here. It'll usually either be this or it'll be just it's in a fucking uptrend and it's pulled back and you think at some point it's going to twist back around and go upwards. Sweet. On the 4 hour, what do you have, Bear candle, small candle, bear candle, a wick candle. But then, oh shit, you got an exciting bullish candle. Then you've got this candle opening right here. The idea is just to wait for everything to start to align, because what that does is it then positions you to have a bigger potential for profit so that you can then add to trades in the lower time frames. That's the short story. Okay, so we're going to wait until the 4 hour starts looking sexy. Okay, so just something that tells us that it might be willing to go. All right, so like a double bottom, like price failed to break the low. That's something. That's exciting. Let's go to the 1 hour and see. Yeah, so a bullish let's see what the next candle is. Yeah, so it looks price is starting to bounce here in the 1 hour. Okay, so 15-minute. Let's see if the 5-minute. There's nothing really here on this time frame right now because it's in a range. But now it gets past the range. So now, my brother, this is when it starts to get exciting. Let's see if it can come back and test and bounce. So it does. All right. So let's say you're going to start a trade here, right? Keep in mind, overall, you think it's just going to go up from this big support zone to this big resistance zone up there, right? That's how it all starts. Now, to structure risk, you can do it one of two ways. You can opt to just enter there, have a really big invalidation, and then a one-to-one take profit target. Then you can just manage the trade contextually, right? Maybe if it breaks below this zone, you can look to exit, or it breaks and comes back a retest and you exit at a little bit less of a loss or whatever. You have a bunch of shit to do. What I've been doing a lot lately is I've been getting the whole idea on the main, like, higher time frames. I've just been risking less. Instead of like 20K per trade, right? I'm risking like 5K per trade. And I'm generally just setting in validation on the other side of the recent lows. Right? And then targets could be fucking anything, bro. Like the top of this resistance zone is way the hell up here. We don't know if it'll get there, obviously. You just start the trade off, right? With just structuring it. So now you've got everything. Fuck, bro. Wow, dude. Wow. Let me just see if I can get back to there. Wow. I just completely. Let me see. Command Z. Wow, dude. I completely fucked it up. All right, so let's just go back here to where we were. There we go. Okay. So, we already saw what happened. It worked out. But anyway, let's just say you put your invalidation under the most recent lows, right? It starts going up. It's making higher highs and higher lows. The idea is that if it's going to continue this fucking uptrend thing, it's probably not going to break out of one of the recent lows, right? So that's the idea. That is why invalidation goes on the other side of the previous lows, because it's just a good way of controlling risk. I'd probably use this low up here, because it did make a new high, so it's like, so probably these lows right here, invalidation somewhere underneath it. I don't like putting it just under them, because it can still technically like fucking come back and then bounce somewhere in there, and it's still technically bouncing at the top of that resistance zone, and I don't want to get stopped out, so I'd probably put it like something like that. Now, the idea behind, here's the fun part, right? The part that you're trying to get at. Because we've structured this trade based on the higher time frames, because we think there's a big move likely to play out based on those higher time frames, that is like a really important piece of shit right there, bro. Because you can't, if you're doing this just on 1 minute and 5 minute, you're gonna get fucked because you don't know how far it's likely to go, right? If you line yourself up for a big move on the higher time frames, adding in is just simply getting like rational entries in the lower time frames. Now, what does an entry in the lower time frames look like? If you're buying, it's typically just a higher high, and then you wait for a pullback, and then whenever it looks like it's starting to bounce, then you just add there. That's it, bro. It's really not, it's not that complicated, right? Because then if you do that, that becomes your new reference zone, because now you think if it's going to go up, it's not going to fucking break that low, so then you could just bring your invalidations up to there. This one is like half of what your original invalidation was. Let's say you're risking $1,000. This position's now $500 risk, and your first position's essentially a break even. If that stops out, you lose like $100, $200, right? No big deal. So let's see if that actually happens here. Let's see if it makes a higher high and then it pulls back. All right, so it's going up, going down. I think this one fucks up, doesn't it? Yeah, it goes back, it touches the low. Now, some people will freak the fuck out, and they'll be like, Nick, it broke that low. So technically, it's not in an uptrend, right? If you're being real technical, then yeah. But here's the thing. If you're being really fucking technical with trading in general, anything outside of planning the risk structure and trade management before you enter the trade, right? That's like 10% of the shit that's technical. The rest of it, 90% of it's just skills and experience and just seeing the same shit over and over and deciding what you think is best given the context. So while technically it broke out of the recent low, do you actually think this shit is likely to just completely fuck up and go the other way? Because if you did, then you could just sell and you could just try to target that. But do you actually fucking think that's going to happen? Like, when you go to the daily and you see it's at the major support, and you go to the 4 hour and it's made this fucking double bottom, you go to the 1 hour and 15 minute, it's literally broken the recent highs. Like, do you actually like legit think it's going to go down? If you don't think it's going to fuck up, based on the totality of the circumstances, you can ignore little shit like this where, okay, technically it broke the low, but like there's like, it could bounce here at these lows and it could also bounce here at this major like resistance zone that price just finally fucking broke past after it's been ranging here for like a couple days, or 1 day in this case. This is all technical stuff you're going to learn with time. I think it's still fine. I'm like, okay, yeah, it technically broke the low, but it's still fine. You'll notice there's nowhere to add yet because we don't really have any new structures being created. We need to let it kind of go into a little bit of profit first. You can add in drawdown, yes, but you're increasing the risk. I still do that sometimes. Maybe like 20% of the time I add in drawdown. If it's at the next zone, I can get a tight invalidation. Usually if I'm adding in drawdown, it's more like a recovery trade, and I'm just trying to recover the initial thing. So price broke below this zone, I'd probably call it right there. I'd be like, yep, let's stop out right there. Let's get the fuck out. For this to start going back up, we're going to have to break past these previous highs. So let's kind of wait and see if there's somewhere we could add to it. All right, so it's getting a little bit more fancy, bro. All right, sweet. So now we've gotten past the previous highs. We made some higher highs and higher lows. Made a higher high in profit. Let's wait for it to pull back. Then if it pulls back and then starts to look like it's going to twist back around, we will simply add. That's how fucking simple it is, bro. None of this shit, like, if it's 25% or more to the profit, I will add and then move the first stop to break even. None of that shit, bro. You have to take it on a trade-by-trade basis and look at the actual specifics and context and nuances depending on what the specific trading opportunity is. If you just have a black and white rule that's like, I will add at 25% into profit and then move the stop loss to break even for the first position and blah, 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 all this bullshit. It does not contextualize the actual trading opportunity. We're going to contextualize it here in a second. Let's see if we get an entry. All right, let's go ahead and add right here to this. I'm trying to think of where we could put the... So let's say it's pulled back, started to go up. Let's say we get a shitty entry. We add over here as it's making a higher high, right? This is 1 unit of risk right here. Even if we move this stop loss up to have the invalidation under the recent lows right there, this is still 1.5 units of risk. If you really think a trade is going to work out, it's okay to do this. If you don't want to go over your 1R risk because you're so fucking scared and you've risked like 20% per trade, it's probably not the best idea to do this. Let's just say we pussy out. Let's just say we don't. Let's say we don't add to it. Let's wait for a little bit more profit, a little bit more of a pullback, and then we can see if we can add to a trade and then get it going. So we pushed up. Let's wait for a pullback. I would like to wait for something a little bit more like that. That would just give us kind of more wiggle room. So let's see if it can pull back more. Okay. So this gives us a new way of controlling risk. So price has been going up, making higher highs and higher lows. Had a nice pullback along this little set of higher lows. And now it started going back up. So what we can do now is we can put invalidations just under these previous lows right here. And we can put, that would mean this position can go to break even. And then we're adding it up here. And then this is the original invalidation, like 46 pips. So that means if this fucks up and it breaks this loan and breaks the zone and goes all the way down here, we lose 1R on this trade, and then the first one breaks even. So we're not really adding any additional risk, right? The risk has remained at 1R. Sure, we're risking all the fucking profits we've made because you've made 1R profit on this entry so far. So not only would you lose that 1R profit, but you'd also take a 1R loss, meaning from the net equity right now, you'd be down 2R from where the equity would be sitting out on this open trade. So let's play this out and see how it goes. Pulls back, makes a higher low. Let's see if it keeps going. So this one pulls back and stops out. So we've had this, a break even, and that a 1R loss. Let's keep that in mind. And let's also remember the overall trading opportunity in the daily chart and 1 hour and 4 hour and everything, it's all still there. You still think like, it's not like you're fucking like looking at the 4 hour like, no, it's no longer going to work out, bro. It's like you still think this overall move is likely to play out. So, you're down 1R. It's just a matter of finding a move. So now what we can do is we can say, okay, this like looks like the new fucking uptrend area. We get the double bottom, higher high, higher low, higher high, higher low. It's just kind of observing it from a higher time frame now, like the 15-minute chart. So let's see if we can get a little bit of bouncing right here. And if price starts to bounce upwards, then we can just add right back in. We need to break past all these highs. So like some shit like a higher high, then a higher low, some shit like that to like get back in. Yeah, so let's wait for a pullback. We can get back in. So we have the pullback. Let's see if we bounce here. There's no way to fucking get into that because that was probably a new spike or something. That's 21.30 at that time. So there's nowhere to start a position here because it's made a fucking higher high. So it's if you think it's gonna pull back, which that's likely. There's nowhere. It's not good to start a position when prices made a higher high like that. Okay, so now we've pulled back. This might turn into like a break or retest something. Let's see if it can make a higher high, and if it does, we can start the position. So if we've not made a higher high, we couldn't get past the recent highs. See if we make a higher high here. Yeah. Okay, so we make a higher high here. Let's reference this as the most recent low, and let's start a position. So keep in mind, on the daily, we still think this big fucking from here to here is going to play out, right? And if that happens, we should see another leg up, making a higher high in here. So let's see if we can position ourselves to profit from that, should that happen. Let's just see. All right, so yeah, profit target, being like a higher high or something. This is like 1R risk. And now let's just let it play out. So that one almost took out the fucking stop. Like I said, that's why I don't like putting stops like right under the low. I space it out a little bit just to give it a little bit of room. Now for adding, would you add in right there? Well, it'd be kind of a stupid thing to do because then it could just like fucking pull back, knock your second position out at a stop loss and your first position out at break even, just to maybe make a higher high there and go right back up, leaving you frustrated. You need to pull back first. That's a pretty good pullback. So there's a pullback here, then a spike up. It would be chasing it at this point, though, because if you entered there, this invalidation is the same. I mean, that's like really fucking close. You're really likely to get stopped out on that. So in this case, I just wouldn't add. I would wait for some sort of a pullback. There we go. Okay, now if it starts going up, now this will be a good spot. There we go. All right. We can add right there. We'll put an invalidation underneath that low. That also means we can bring that first position to break even. And remember, if this little uptrend shit's going to hold, that might be the new higher low, and then it might be going up. So let's see if we can get a higher high, then we can get the fuck out and get on with the day. It got a higher high. So I'm just going to pussy out and say like we get out right there. Okay, so while maintaining that 1 unit of risk and moving this position up to break even, this one had just over a 2R. This one had just over a 1R, 1.33. So this is probably about 3.5 units of reward. Subtract the 1 unit of loss we had on the other one. We had a break even, and then we had a 1 unit of loss. It's 3.5 minus 1, so we still came up 2.5R. And this is just, 4 trades, but within the context of one trading opportunity, right? That's why you have to start, in my opinion, it's just, not financial advice, do whatever the fuck you want. But in my opinion, it's easier to do this whenever you're adding to winning trades if you start from the higher time frames and kind of have an idea, right? The simple shit, bro, you're not looking for anything complicated. You just start on the daily. If it looks like it's a fucking uptrend or a downtrend, or if it looks like prices at a major support or major resistance zone, that's so fucking clearly obvious that you just you'd be surprised if it didn't bounce there. If you find something like that in the higher time frames, that gives you a place to start. Guess what, bro? If you start on the higher time frames and you don't see shit, right? You see, in this case, AUD USD looks like it's in a range, and it might be in a sort of a downtrend, but then it might also be reversing soon at that low. And it's not really at a clear support zone because the support zone's down there. Guess what, bro? Just don't fucking trade it. Just don't do it. Just go to some other shit. You'll see the past 2 weeks, I've almost exclusively just traded EuroCAD, USDJPY, and USD CAD. Why? Because when you look at the charts like these, like on UJ, for example, on the daily, dude, it's in nothing but an uptrend, right? Like, you'd have to be completely fucking retarded, like, and not in a mean way, but you know what I mean. Like, you'd have to be kind of like goofy to be looking at this and saying, oh, I don't know if that's an uptrend. I'm not sure, right? No, it's clearly a fucking obvious uptrend. Like the daily, the 4 hours in an uptrend, the 1 hour is in an uptrend, the fucking 15 minutes in an uptrend, the 1 minute, the 5 minute, everything is in a fucking uptrend, bro. I made so much money these past 2 weeks. I made $60,000 this past 2 weeks. 40K 2 weeks ago, and then last week I made 20K. So right, this is like it's like 12 units of reward just following these directions because I thought the directions were pretty clear, and it all started from the daily time frame. I mean, it's crazy. Like $60,000 from almost exclusively EuroCAD, USD/JPY, and USD/CAD. There might have been a couple more in there, but I think it was just these three pairs. Almost all the trades the past 2 weeks have come just from these trades. Why? Because I'm just like contextualizing it, right? If the daily's gonna keep fucking going up, bro, that means the 5 minute's gonna go up. And if you're getting in like on some sort of structure, like you think it's like it's going up, down makes the higher low, higher high, higher low, higher high, higher low, higher high, higher low. Well, you just find wherever you think the recent higher low is, let it pull back along the little pattern of higher highs and higher lows. I would not use like a trend line because then you can just get super fucking frustrated because price never respects a trend line exactly. That's why I just draw the upwards arrow, and that tells me like, okay, you probably shouldn't be buying up here on a higher high. Probably be a less retarded idea to just wait for it to pull back and then start to kind of like stop there and bounce. And then if you think it's going to be going up from there, that's probably going to be the new higher low. So if you're entering a trade, you can just enter when you think it's going to bounce there. It starts bouncing. And you put your stop underneath that low, a target of a higher high if you think the final move on the daily is going to be somewhere up there. This already gives you out starting at least a 1-to-1, right? It's a 1-to-1, 1-to-2, 1-to-3, whatever the fuck it is. Then if it starts moving up even more, right, creating the same pattern, it's got a higher high, pulls back, just like we talked about, makes a higher low. Well, then you can just fucking add in right there, like as it starts going back up. And if it starts going back up and then you can add up here, and you can then, now your reference point becomes this low up here. So in this case, it's a support resistance zone. Now you can just fucking drag your invalidation for that like halfway. And this, you can drag this halfway. Now, if that stops out, bro, you lose, whatever the fuck this is. Like you lose, this is like 0.7 units of risk. This is like 1/3 unit of risk. You're still risking about 1R, right? Because you've added to the trade after some market structure has been developed and prices made some higher highs and higher lows. And then you just drug your invalidations closer for the first position. It doesn't always have to be break even, bro. Oftentimes you're gonna find yourself real fucking frustrated if you just move your positions to break even. You should drag your stop losses up, and it not necessarily stops, but your invalidations, right? You can set your alerts on areas where you think, okay, if it breaks this zone, then I would like to be out of this trade because it's broken the higher low, and then, then maybe it might fucking start going down, and then, you're out of the trade. But as long as it doesn't break this zone, you're good. If you drag every one of your goddamn positions up to break even for the first trade after you add, you're going to be very frustrated, bro, because it could just simply pull back, like pin barely below the zone, and then just pop right back up and keep going. I just think that's a very frustrating way to trade, right? It makes more sense to just say, my original stop was there, and this stop is like, the same distance whenever because you're using the same lot size when you add. That's just what I do. So it's like if you this is like say 11 pips to stop, right? If we move this to like 5 pips, right? It's still underneath this zone, a nice clear distance underneath the zone. And then with this one, you can drag that to 5 pips. That's probably fucking kind of close. So honestly, I would have just drug that like down to there, drug this up to here. In this case, the original invalidation was like 11 pips. This is just under 1 unit of risk plus that. This is probably total, maybe just above 1R risk. But guess what, bro? That's okay. Because if you think the idea is going to play out and you've risked small enough on your first trade, if it's like 5 to 10% of the account, right? I'm not saying put all your trading capital in one account and risk 5 to 10%. I would never do that. My risk per trade of my total trading capital is like 1/3 of 1% when I'm risking $5,000 fucking dollars, bro. It's like, it's almost nothing for me. So, but what I am saying is whenever you do put your money into an account, make sure there's enough in the account so that if you take a losing streak of like 5-6 trades in a row, it's not going to blow the account. So if you're risking like $100 per trade and you want to risk $100 per trade, put like at least $1,000 in the account, because then you can risk $100 per trade. Dude, you have to fuck up 10 trades in a row with no mercy, no love, and not a single winner. You have to lose 10 fucking trades in a row to blow the account. Can that happen? Yes, of course. It can, and it will happen at some point. You'll take a bad losing streak. I blew a $100,000 account 2 months ago. Like, that shit just happens. It's the first fucking big account I've ever blown doing this shit in the past 2 years. However, most of the time it doesn't happen. So you may lose 5 trades in a row, so you've lost $500, but it's not that big of a deal because now you still have $500 left in the account. You can still continue risking $100 per trade, and eventually, if you just get one winner, like, you'll make back all the losses with profits because the winners are so big and your losses are kept small. But it has to be contextualized. Don't place stop losses to break even just for the sake of, like, that's just my strategy, bro. That's just my mechanical. When it's 25% of the way into profit, I move the stop to break even, and then I add to that, and then I have I don't know, man. You could do that if you want. I just don't think it works very well because it does not contextualize the actual trade, and it doesn't allow you to make those specific decisions based on the nuances of that given trade. You cannot apply that general wide framework to fucking everything because trading is just not that simple. You can keep things simple, you can control risk, but ultimately, bro, all these little tiny decisions and nuances come as a result of experiences. That's why I say it's best to just not have any hard trading rules outside of what your entry criteria is. If your entry criteria is, let me go to the daily chart and let me just buy on a dip if I think it's in an uptrend, or let me buy at a major support zone and a stop below and a target above of at least 1-to-1, right? Very simple way to get yourself into trades, right? That's as mechanical as it has to be. That takes like 10 seconds, right? Barely any time. You can structure your risk that way, and you can also have like sort of a predictable entry criteria. But then you can start having fun going into like the 1 hour, 15 minute, 5 minute, and just watch what price is doing, bro. If it's going to bounce off the daily zone and start going up, the 5 minute and 15 minute are just going to start making higher highs and higher lows. Once those paint, right, you can have your first position if you're not already in it, but you can also add to the position as it starts to paint that structure and continues into profit. This means when you lose, worst case scenario, you're losing like maybe 1R. Best case scenario, when you win, you make 3, 4, 5, 6R, right? I showed you the first case scenario on the last trade for GBP AUD here on this little backtest bullshit thing I was doing. That first one, started going to profit. Everything was going nice. Second trade came back, stopped at a break even. It was no big fucking deal, right? We lost 1R, right? And if it would have gone up, we would have made 3, 4, 5R. We waited for it to pull back, waited for some structure to get created, thought like, okay, maybe this will be the higher low. It's on the 15-minute chart. Looks like it's still going up. The daily 4-hour chart bias, all that shit remains the same. We still think it's going to bounce from the support and go up to the resistance on those time frames. So then you just simply went to the lower time frame again. We got a first entry that went into profit, had a nice pullback, started going back up. We added. Risk was maintained at around 1R for the whole time. Then when it just simply popped up and made a higher high, guess what, bro? We didn't even have to hold all the way to the next fucking daily zone on that trade. Like, we just closed when it made a higher high there on the 5-minute, 15-minute chart because you already got 2 positions. It's in profit almost fucking 4R. Like, that's a good trade, bro. If I'm in profit at 4R, that's $20,000, dude. That shit is insane. Like, that, if you could do that, that just ensures that you're making more on your winners than you're losing on your losers. But most importantly, it's allowing you to contextualize it and to place your invalidations at proper locations that make logical sense based on the context, as opposed to just sticking to a black and white system like you're attempting to do right now. So yeah, no problem, bro. I used to be there too. It's okay. It's like trading is better when you manage things based on the context, in my opinion, and not so much super black and white, hellishly like difficult rules that you have to follow for every goddamn trade, even when it doesn't make contextual sense to do so. So let me know what you think of this video, bro. If you guys enjoyed this video, you just let me know. Or actually don't even let me know. If you enjoyed this video, sweet. Like, great. If you didn't, fuck off. Whatever. It's fine. I'll see you guys in the next one. Bye.